Ladies and gentlemen, good day and welcome to the SMC Global Securities Limited Q4 and FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gautam Kothari from XB4 Advisory. Thank you, and over to you, sir.
Thank you. Good evening, everyone. Thank you for joining us on the Q4 FY25 earnings conference call. Joining us today on the call are Mr. Subhash Chandra Agarwal, Chairman and Managing Director, SMC Group, Mr. Mahesh C. Gupta, Vice Chairman and Managing Director, SMC Group, Dr. D.K. Agarwal, Chairman and Managing Director, SMC Capitals Limited, Mr. Ajay Garg, Director and CEO, SMC Global Securities Limited, Mr. Anurag Bansal, Full-Time Director, SMC Global Securities Limited, Mr. Himanshu Gupta, Director and CEO of Moneywise Financial Services Private Limited, Ms. Shruti Agarwal, Full-Time Director, SMC Global Securities Limited, and Mr. Vinod Kumar Jhamar, President and Group CFO. Before we begin, please note that today's discussions may include forward-looking statements which reflect the company's current views and expectations. These statements are subject to risk and uncertainties, and actual results may differ materially. A detailed safe harbor statement is provided on the second last page of our earnings presentation, which is available on the stock exchanges and the company's website. With this, I now invite Mr. Subhash Agarwal to share his opening remarks. Over to you, sir.
Good evening, everyone, and a warm welcome to all participants on this call. I trust you have had the opportunity to review our Quarter 4 financial year 25 financial results and earning presentation, which are available on both the stock exchanges and our website. Amid rising India-Pakistan tensions in recent days, we express our heartfelt prayers and gratitude for the well-being and safety of our armed forces, who tirelessly safeguard our nation day and night. Before discussing our financial performance, allow me to provide some context on the broader industry landscape and recent developments that have shaped the business environment. Industry outlook: the broking and financial services industry witnessed several significant developments in the last quarter, driven by regulatory changes and shifting market dynamics. One of the most notable industry-wide developments has been the moderation in derivative trading volumes following the introduction of stricter norms in the F&O segment. This, combined with rising geopolitical tensions, has led to a visible slowdown in market participation and retail activity. Many intermediaries across the sector are navigating short-term revenue pressure. As a result, India's capital markets are currently evolving through a pivotal transition shaped by regulatory shifts and global uncertainties. One of the most significant changes has been the enforcement of new F&O norms, coupled with heightened geopolitical tensions. India is still on a strong path, but geopolitical risk remains a concern, which has led to a visible slowdown in market activity. These developments have tempered trading volumes, client engagement, and overall execution in the short run. However, we see this as a strategic inflection point rather than a setback. Regulatory measures often trigger initial friction, but over time they pave the way for a more disciplined, transparent, and stable market environment. This transition offers long-term advantages, particularly for well-positioned intermediaries like us. Company highlights. Now let me walk you through some key performance highlights for SMC Global Securities. Despite the regulatory headwinds, we reported revenue growth across all three of our core business segments: broking, distribution and trading, financing, and insurance broking. In Quarter 4 Financial 25, our consolidated revenue came in at rupees 421.5 crore, EBITDA stood at rupees 63 crores, and PAT at rupees 4.1 crore. For the full year Financial 25, revenue grew by 8.4% YOY to 1,775.7 crore, with EBITDA at rupees 419.4 crore and PAT at rupees 146.8 crore. Our expansive network includes 2,147 authorized persons across 425 cities. Underscoring our pan-India reach, we now have 6,748 financial distributors, and our mutual fund AUM stands at rupees 4,178 crores. In our NBFC operations, we are active through 41 branches covering 9 states, steadily expanding our leading footprint. Our insurance vertical continues to grow, operating from 8 branches nationwide and supported by a strong base of 16,022 PPODs and 348 MISPs. While Q4 witnessing some revenue pressure due to external factors, we remain confident of a revival across all verticals, broking, financing and insurance as market conditions normalize and investor sentiment improve. Our diversified business model, expanding network and ongoing investments in technology leave us well equipped to pursue sustainable long-term growth. With that, I now hand over to Mr. Vinod Kumar Jamar, our President and Group CFO, for a detailed overview of our financial performance. Over to you, Vinod.
Thank you, Subhash sir, and good evening to everyone on the call. Let me now take you through financial performance for Q4 FY25 and the full financial year on a consolidated basis. For Q4 FY25, operating income stood at rupees 421.5 crores. Operating EBITDA was approximately rupees 63 crores. EBITDA margin came at 14.9%. PAT stood at rupees 4.1 crores with PAT margin of 1%. For full year FY25, operating income reached 1,775.7 crores, marking an 8.4% YOY growth. Operating EBITDA stood at 409.4 crores, showing a slight decline of 1.5% YOY. EBITDA margin was at 23.6%. PAT stood at 146.8 crores with PAT margin of 8.3%. Segment-wise performance, in the broking, distribution and trading segment, Q4 FY revenue was rupees 240.5 crores. FY25 revenue was 1,044.5 crores, up by 8.6% YOY. Branch network expanded to 208 from 188 in FY24. In broking DP AUA, asset under administration, we added rupees 36,413 crores in our DP AUA during FY25, marking a 46% growth. Over 1 lakh new demat accounts were opened. Wealth advisory AUM reached rupees 948 crores, a 4.4% increase YOY. Mutual fund AUM rose to 4,178 crores, up 9.9% YOY. We added 13,930 new SIPs in FY25. Corporate FD procurement also showed marginal growth. In the financing segment, Q4 revenue was rupees 40.9 crores. FY25 revenue stood at rupees 220.6 crores, reflecting an 8.2% YOY increase. NBFC AUM reached rupees 1,291 crores, up by 4.2% YOY. GNPA and NPA were 3.6% and 2.2% respectively. In the insurance broking division, Q4 FI revenue stood at rupees 160.3 crores. FY20 revenue was rupees 570 crores, registering 7.9 YOY growth. Total insurance policies sold crossed rupees 10 lakh, the 10 lakh mark in FY25. With this, we conclude our remarks and open the floor Q&A. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, please press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. I repeat, if you wish to ask a question, you may press star and 1. We have a first question from the line of Rahul, an individual investor. Please go ahead.
Yeah. Hi. Good evening, everyone. Yeah, I have a question regarding the NBFC segment. We understand that the entire NBFC market is going through a bad phase, and as far as our SMC is concerned, our GNPA is increasing and NPA is increasing along with the credit costs. The NBFC AUM has increased only by 4-5%, mainly on the year-to-year basis. So, have we seen a rock bottom, we can say, by the end of this quarter? Can we expect a new beginning from this quarter itself?
Yes. Hi, Rahul. This is Himanshu Gupta. So, as you rightly mentioned, this year was a bad phase for the industry as a whole, and we were very cautious in terms of new lending. So, we in fact had, tightened our underwriting policies during the year, and as a result, we were able to grow just by about 4 to 5% of the AUM. And as you rightly also said, the GNPA numbers for us also, increased to 3.55% as compared to around 2.22% last year. So, but if you compare it with the industry, our delinquencies and the credit quality, is much better than, many other players in the industry who are operating in the same segment. So we are in a much better position, first of all, and we are also very hopeful and confident about having this year FY26 to be much better year for us in terms of the AUM growth as well as the quality of our portfolio. And also in addition to that, we expect our spreads or margins to be better because we are working on increasing our yields on our asset book, as well as, there are certain tailwinds in terms of the cost of finance which is available for the NBFCs due to the reduction in interest rates and, revision in RBI's stance on risk weight on bank loan to NBFCs. So as a whole, we expect this year to be much better as compared to FY25.
So if you want to give the numbers on the guidance basis for AUM growth in the other parameters, which normally industry look forward for?
So, we expect this year the AUM to grow by around 20%, but, we would have better visibility as, go down the year, quarter on quarter.
And what about GNPA and NPA credit costs about this first quarter? Like already 40 days to 45 days has been passed on. What have been experiencing in terms of GNPA and all about this credit cost?
So, there are certain large accounts which are included in the GNPA, and we are closely monitoring the recoveries in those accounts. If, as and when there is, recovery in one or two accounts, we would see the numbers going down. So we are closely working on that. It is very difficult to comment whether it would happen in quarter one or, other quarters, but we are, expecting the recovery during the year.
Okay. And another thing I noticed that your secured loan percentage revolves around in the last Q4 around 61.5%. And if I compare with the Q3 basis, the secured loan percentage goes around 65% basis. And if I remember your phone call from the Q3 basis, you were saying we are looking for increasing the secured loans. So are we going against the trend, what we were giving in the guidance?
So currently, I think by end of this year, it was about 64% roughly. And in the next 3 to 4 years, we are, our plan is to increase the secured AUM to 75%. And we are working on that.
Okay. And another question from the stockbroking segment, like how do you people see in the stockbroking segment, how will we perform, like that when the segment has certain regulations with respect to increased margins? How are we seeing this year in terms of new clients, demat account and the volume growth?
Yeah, hi Rahul, Ajay Garg this side. So Ideally, stockbroking, certain regulatory changes had come under the earlier SEBI chairman regime, where the weekly options has been restricted to only Nifty and Sensex. Earlier, we used to have five, six other contracts. Weekly option was there, and even the expiry has been restricted to only one expiry per exchange. So, and certain margins on expiry have been increased. So, and coupled with this, a lot of SPI selling was there since October. So, in cash market as well as in F&O market, we saw a drastic decrease in volume. But now, like even the India-Pakistan thing has been sorted out, and even FPI have stopped their selling, and they are now in positive for last 2 months, and continuously DI buying SIP of more than 25,000 crore every month is coming. So things seems to be much better, way ahead. And with the new chairman, SEBI, he seems to be very friendly, and he is open to review the policies, and we feel that it would be positive for the market, and certain ease would be done as far as the regulation is concerned. Certain things has already come as far as the limit on F&O circular has already come. And you see, India is a fastest growing economy in the world, and stock market still is very under penetrated. So there is a huge scope, and we are very bullish and positive about it.
Okay. And okay, yeah, that's it from my side. Thank you.
Thank you.
Thank you. A reminder to all participants, if you wish to ask a question, you may press star and 1. I repeat, if you wish to ask a question, you may press star and 1 on your touch-tone phone. A reminder to all participants, you may press star and 1 to ask a question. Participants who wish to ask a question may press star and 1. We have a follow-up question from the line of Rahul, an individual investor. Please go ahead.
Yeah, one more question. I'm able to see there is a minus 9.32 loss in the net gain of fair value changes. Is this a one-time activity? Like, if you can explain me what is the scenario behind it?
Yeah, this fair value changes reflects the mark-to-market changes in our investment portfolio. So since markets were down in March, there is some negative balances. But as the market improves, this will be better in future.
Okay. Thank you so much.
Thank you. A reminder to all participants, if you wish to ask a question, you may press star and 1. Participants who wish to ask a question may press star and 1 on their touch-tone telephone. A reminder to all participants, if you wish to ask a question, you may press star and 1. Participants who wish to ask a question may press star and 1 on the touch-tone telephone. Participants who wish to ask a question, you may press star and 1. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Yeah, myself Mahesh Gupta. Thank you all for joining today's earnings call. We trust we were able to address your queries effectively. Should you have any further questions or need more information about the company, please feel free to reach out to our Investor Relations advisors at XB4 Advisory. Stay safe and healthy. Thank you very much to all.
Thank you very much, sir. On behalf of SMC Global Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.